We went live while I was still drinking water. Happy Monday, and welcome back to another episode of Go FUD Yourself. Yara got a haircut, so it looks a little bit different today. She also changed her name to Patrick, which is pretty normal in this day and age. But anyways, we're joined by one of my great friends, partners, and a good friend of the pod, Mr. Patrick Kiefer. What's going on, brother?
It's great to see you.
You as well. Thanks for jumping on. In the absence of our daily duo, we get to bring some fun guests on. We've got Mikhail from Certic tomorrow, which will be really exciting too. Anyways, all right, so weekend was busy and full of fireworks. It was kind of exciting. If you were even remotely tangentially connected to the space in any way, there's been a lot of positive momentum, news, sentiment. Crypto Twitter is actually not all pain and misery and FUD at the moment, although there's still plenty of that to go around. So anyways, we're gonna kind of fill you up from what happened over the weekend and the prevailing news narratives at the moment, which will include Bybit being sued for $953 million from the bankrupt FTX. We're going to talk about the bankrupt FTX bankruptcy in general. We're going to talk about we talked about this a lot, but we're going to talk again about it. The FTX executives. The bankruptcy executives now are talking about launching the crypto exchange again, which I think is hilarious. We're going to talk about BlackRock, PayPal, Celsius, and if we have time, we will get down to Backpack Exchange, Ripple CEO, and a few other kind of minor stories. So quick reminder to everybody, we're a live show Monday to Friday, 12:30 p.m. Eastern. We're on all the major venues and channels. Like, share, subscribe, help us get the word out. We don't commercialize the show, so obviously we don't spend a ton on distribution and advertising. So help us spread the word and help out others in the space, especially if we are knocking on wood and expecting that we might go into some positive cycle here for a bit. We're going to see an influx of unsuspecting new people. And if anybody remembers what happened last cycle and every cycle before that, there's a lot of misleading information and people make very poor decisions based on what social media says. We're hoping to dispel as much of that as possible. All right. I will stop rambling. We'll play our little video here and let's freaking go. So before we get into it, funny story about that, the graphic there where I'm wearing the big gold chain with the RBL thing. So I ordered that RBL thing from this company and it was going to take 8 weeks to get here. So I was like, whatever, forgot about it. Then like 12 weeks later, I got an email saying it was delivered. Nowhere to be found. No one knows where it is. They said it was delivered. My reception, shipping receiving says it was not delivered. I'm like, all right, cool. They don't have tracking, of course. Anyways, so someday I'll get that beautiful RBL thing. Also, a quick shout out to the one bit of commercialization that we do, and that is we take merch sponsorships. So size medium if you want me to wear and shout out. But a shout out today to Halborn, good friends of ours, security experts in the space. They support almost every major blockchain. They scaled really quickly to Halborn, and we can get right into it. So Bybit. Bybit has kind of been one of those meaningful participants in the space that we don't talk about a hell of a lot, generally speaking. And especially over the last cycle, I rarely covered Bybit in any way, and I don't think I used it. But what is kind of running across the news wires over the weekend and into today is the advisors for the FTX bankruptcy are still obviously trying to plug the holes, so to speak, in the FTX balance sheet, and they're looking to recapture and claw back as much of the assets as possible that people withdrew. This particular case is somewhat more egregious in the sense that there was some really weird stuff that happened that allowed them to do this, and they did this at a time when nobody else was able to withdraw. So it essentially shot Bybit due to a certain VIP status to the top of the list in terms of redemptions. They had a different structure on how they could pull money out and when. And they did that as FTX was dying. So they took out almost $1 billion of their value that they had deposited. And I get it to a certain extent. Like, I understand why you would try that, possibly to try. I mean, Bybit obviously is trying to keep their users whole. And so the contagion of this type of thing is problematic. But what are your thoughts on this, Patrick? Do you think this is something like, because it is technically their money, but all of us that are taking a massive haircut because of the hole that's left in the balance sheet, is that fair that they don't take a haircut on $1 billion, but we all do on our, $200,000, $300,000, $400,000 accounts for corporate accounts? What are your
Yeah, I mean, for me, it's a little bit of a tough one. It's a significant amount of money. It sounds like that they had some explicit legal arrangement that opened up this channel for them. Maybe we could look into that a little more. But if that is the case, then it seems like kind of a stretch. I mean, the bankruptcy court does seem to be moving very aggressively, going after. I mean, if I recall correctly, correct me if I'm wrong, but if I recall, they were also trying to claw back money paid to celebrity sponsors.
Yeah.
I mean, they're just going after everyone. And so my sense is for Bybit. And so if they're going after everyone, of course, it makes sense for them to, if they see something like this, to go after it. But if this was, if they pulled the money out before FTX filed for Chapter 11, and they had a legal arrangement with FTX that gave them the right to do this, of course, they're going to do it. They're self-interested. They have their own shareholders to look after. If it was already on paper that this channel was open to them, I'm not sure how far.
Who's responsible for that? Them having a channel that's maybe not so ethical, or the people that gave them said channel that's not so ethical?
Right. Well, I mean, maybe, I don't, and now I'm just speculating, but I mean, maybe they entered into an arrangement with FTX, maybe as an investor or something, under the conditions that they had some channel like this available to them. So in that case, of course, you expect them to use it. I don't know the details of how they spelled out that channel legally.
I'm not sure anybody knows with certainty. What's been reported anywhere that we could find was just that they had special privileges that other customers did not. What those privileges exactly and explicitly are, I have no idea. The thing about bankruptcy, and what's interesting about this bankruptcy in particular, is I believe FTX filed for bankruptcy both in America and in Bahamas. And the rules in America for bankruptcy trustees and the rules in the Bahamas, I'm not a bankruptcy attorney. I'm not an attorney at all. So this is just conjecture and my understanding of the situation. But in America, during bankruptcies, anything that was withdrawn or paid out to vendors or to anybody 90 days leading into the date of filing for bankruptcy is eligible to be clawed back. That is how the law is written. But then, of course, to your point, that's the base law. And then there's all these other, contextual scenarios that, yes, in this case, maybe, it's not as problematic as in this case, et cetera, et cetera. So this is kind of interesting. I mean,
they probably, sorry to interject. Maybe what they're thinking is they can get a settlement out of it. Like, there's enough kind of gray area here. Yeah. They can go after Bybit. They can threaten them with a bunch of stuff. Bybit's going to have to put a bunch of resources into legal defense and so forth, and ultimately may just decide to settle on a much smaller number. And that could be their goal.
Yeah, I mean, I hadn't really thought about that actually, but I mean, ultimately, I think the end goal of the bankruptcy court and the advisors and the trustees is to say, let's just get as much resources back as we can, and then figure out what's actually missing, like what's actually missing that we can't get back. And so right now the hole's 11 billion, but there's arguments that the hole shouldn't be that big if they actually claw stuff back. And then if the hole's not that big, then the entirety of the creditors take a haircut, depositors take a haircut. And so I suspect that's kind of what their end goal is. Of course, Bybit doesn't want to do that, because then they have to explain to all their shareholders, customers, why they're getting a haircut for Bybit's commercial decisions. Sure, that's problematic, but it doesn't mean that it's not going to happen. And so, I mean, on $1 billion, if we're all taking a 30, 40, 50% haircut, I mean, there's $500 million on the table that may have to go back. So it'll be interesting to follow this one. I suspect that they're going to settle similar to you, actually. I think they're just going to agree on a certain amount of money it'll show a win for the FTX trustees. It'll show a win, I think, for Bybit in the sense that they didn't have to give away all of it. That's what I think will happen. But anyways, we can move on from that. Speaking of FTX, we'll continue talking about it. I know we were excited that SBF got convicted and it was maybe not going to dominate the news narrative, but here we are. That's another, never mind. We're going to skip over that one. Let's talk actually about the FTX crypto exchange that some of the executives are about to launch. I'll intro this one a little bit, and I'm curious, Patrick, if you'll use this. But anyways, we have a couple articles on this one. We may potentially skip one of them, but one of the original executives, Can Sun, is part of the group that's launching a new exchange. The company is called Trek Labs, and I believe that the platform or the actual exchange is called Backpack, which is very typical for crypto. Name it something weird and like a physical item, like all the food protocols and all that other crap. This is Backpack.
Backpack, we're on a trek.
Backpack. Yeah, exactly. So anyways, they got a license from Devise crypto regulator, which is, again, a little bit strange that they're able to get licensing while literally one of the biggest, most high-profile bankruptcies and fraud cases of history, especially in crypto. I'm really surprised by this. But before I keep rambling on, what are your thoughts? Like, would you use this exchange from these guys? Like, what, or do we feel like trust can be rebuilt because the assholes aren't there anymore?
I mean, no, I wouldn't use it, but it's surprising that if you read the wording of it, it's funny. It's like, in order to address the shortcomings of FTX, they've secured a license in Emirates. They got a Dubai license to run a crypto exchange. And so this is their solution to the problems at FTX. And that is not a solution to the problems at FTX. That in no way is a solution to the problems at FTX. And so I'm surprised, frankly, that we don't see more in terms of technological solutions to the problems at FTX. I mean, one of the big reasons FTX was so disappointing for people who are working in Web3 was because it was this huge kind of headline level catastrophe that made crypto look really bad, that used almost no crypto technology.
Yeah, I mean, all the stuff that we talk about that's disruptive.
Yeah. and so they're just doing that again. And so I don't know why we don't. I mean, to me, it seems the obvious solution is to lean more into things like self-custody, right, and look at hybrid models. Maybe not purely on chain, but not purely a kind of traditional centralized exchange. And so hybrid models where customers have options for self-custody, things like this, models where the exchange operators don't profit from being able to reinvest in their client funds, right? Yeah. Like, why aren't we seeing more of that? That would directly address the shortcomings of FTX. I don't see how this addresses the shortcomings.
Yeah, I think it's a bit of a step in the right direction, I suppose, because one of the other big problems with FTX is there wasn't meaningful supervision and regulation that was actually watching over them, so to speak, and properly auditing to make sure that things are the way they're claiming they are. That exists, generally speaking, in most regulatory environments. There's some version of compliance and audit that you can't make false statements and claims about your assets and solvency and all these things. So I think just being regulated overtly is important. I'm curious if Dubai is going to have the same stringent standards as America and other Western jurisdictions. But to your point, if FTX showed us anything, and we've now seen this replicated across many smaller but fairly sizable exchanges still, there's just there's such a lack of transparency that all of these crazy weird things can happen and they go unchecked. There's no checks and balances at all for most of these, kind of Web 2-esque crypto platforms like FTX and so on. And even Coinbase, if you look at Coinbase, I mean, Coinbase has launched Base as in an effort to help alleviate a lot of those criticisms of the kind of traditional financial entity model. And although it's managed and supervised, I mean, that's part of why the space was originally created in a lot of ways. So how do you think about that? Do you think does this take us now, unfortunately, a step back in terms of, because we talk about the carrot and the stick, right? So sometimes there's a carrot that you have to use to motivate people. And in this case, I think the stick is pretty compelling, that Sam is probably going to get the book thrown at him and rightly so, in my opinion. But I mean, it's supposed to be a deterrent. But then if the other executives are now rewarded for pointing their finger at Sam, getting plea deals and getting off because they were a state witness, and now they go and launch another exchange, like maybe they're all above board people. I'd like to hope to think so. But yeah, I guess we'll have to.
Yeah, I imagine a lot of it is just because the FTX name is like they get to kind of leapfrog a bit of the marketing and PR work that needs to be done to get their name out there.
Yeah.
But it doesn't seem like there's any innovative product here. It doesn't seem like there's some technology that's a fundamental improvement. But you mentioned Base and Coinbase earlier. I mean, you and I talk about this quite a bit. I'm actually very excited about this type of model, this more of a hybrid model where it's easier for people who may not be, fluent in Web3 to onboard, to create accounts, and to have access to buying and selling crypto, not only buying and selling crypto, but also to workflows that are deployed on blockchain. So this kind of Coinbase Base nexus is actually a very interesting model in terms of being able to combine both of these kind of categories of workflows and user types. And so I'm much more interested in, and again, you and I talk about this quite a bit, I'm much more interested in that type of model than what these former.
It really showcases a lot of the really disruptive innovations in blockchain that currently, under the current model, where most of the assets are living under these kind of quasi-centralized entities, they're not, to your point from earlier, not taking advantage of 99% of all the innovative benefits of blockchain. And so that kind of doesn't make sense. This industry was started and we're all building here to have a meaningful impact on society and make things better for people. And yeah, hopefully we see more innovation. But I really think that we're working in the right direction towards this transparency and being able to meaningfully understand what's happening without needing subpoenas and needing this and that and the other thing. Everything's on chain. When everything's on chain, it's a lot easier to figure out what's happening. So anyways, we won't belabor that point anymore. I mean, obviously, I'm not a big fan. It's the same thing. The Three Arrows guys, Kyle and Sue, I think Sue's arrested now, but Kyle's still in Dubai, I think. They raised like 30 million to launch a new exchange, same bull, got a Dubai license somehow after being on the lam for Terra Luna and Three Arrows, and Defiance, what? Anyways, so these things are kind of weird. It's a little strange. I guess we'll have to see. Maybe they're hoping to tap into, a different client base using some brand recognition from before, hoping that most of the people in the areas of the world that they live, in both cases Dubai, aren't paying attention to American news, probably likely. And maybe they hope they can just, ride on the coattails a little bit and make it to Valhalla with all of the Muslim world being there.
I mean, kind of while people are paying attention to them, take advantage of it. Did you read that there was this account that this guy Can Sun made about conversations that he had with SBF, over the course of a few days when everything became public in terms of what was happening there. And he was breaking down kind of his description of what he knew and when. Yeah. And he was describing this walk that he took, a one-on-one walk with him and SBF at night outside their apartment in the Bahamas, where SBF basically finally told him that Alameda had been using the FTX funds. And it's really a striking story. If you believe his account, it's really amazing. Like,
yeah, I want to believe
doing.
him. He's actually the first crypto attorney that we ever engaged. He used to be at Fenwick. I'm assuming it's the same CanSun. How many CanSuns could there possibly be? But he was at Fenwick and then left just as we were onboarding in the offshore structure for Benki. So 21. He was our first point of contact. And then before we could even do a ton of work, he left to go join FTX. And so now the rest is written. But I mean, he is a very well-respected attorney in the U.S., securities attorney. So he's not a slouch, right? And I tend to want to show deference to his track record rather than assume he's got it like SBF. So I would hope that there's some legitimacy here. I mean, his one of the other co-founders, I believe, was his kind of 2IC, second in command. Zhang was her last name, I think. I can't remember. But anyways, I want to believe that there's some, that, you know, they're in all of these organizations, and that's usually the case, right? It's not usually the entire organization that's corrupted and a disaster, other than the U.S. government. But most of these companies, it's usually, if anything, you know, just a few executives or a group of bad actors that conspire to accomplish a lot of this crap. And so I suppose if it's implied that we should believe that SBF was the only problem here and everybody else was, you know, cleaned of any responsibility here, then maybe that's fine. I don't know. Anyways, a little bit more feel-good news instead of FTX debacles, but BlackRock diving deeper into crypto. We reported on some speculation last week that they had created the trust company for an Ethereum ETF. And so that obviously is usually a precursor to an Ethereum ETF application. You have to have the trust company established. So BlackRock finally now has confirmed this. They are, in fact, going to apply for a ETH spot ETF in the US imminently. Super exciting from my perspective. What do you think? Are you a Larry Fink fan? I know you might be.
I am. I mentioned this before. I was actually a Fink fellow when I was doing my PhD at UCLA, so big fan. Look, I love the name. I mean, it's not like a creative name or anything, but I love just seeing it written down. iShares Ethereum Trust. I just I'm definitely bullish on this. I feel like it had more of an impact on other alts than Ethereum in terms of the price action, though, which is interesting. I'm not sure if there was some other. I think there were a few other things going on, but Solana and then later last week, Avalanche also really took off. I mean, I think Ethereum only got, call it a 10% bump max or something off of this, whereas Solana and Avalanche were almost 2x or something. So I'm not exactly sure what the price action, how to interpret the price action off of this news.
So my thoughts on all three of those scenarios. The first one, Solana and Avalanche ripping, is because Solana and Avalanche got hammered worse than any of the other top 10, 20 projects. So they were due for a bit of a recovery once people started to think the market might not be continuing to die. So that I think is I suppose part of it. I don't know. I guess we'll have to wait and see. I think the market, honestly, like my interpretation of this is we're just not ready to accept that this is a high likelihood scenario. Like, I mean, we've waited for damn near a decade for the Bitcoin ETF, and many of the criticisms of Bitcoin potentially still exist in Ethereum, in that it hasn't hit the same critical mass of market cap. There's a whole bunch of other nuances and risk vectors for Ethereum in particular because of the smart contract aspects and all this stuff. So we'll have to wait and see. That's what I think. I think there was still a bump because people are like, cool, another signal. BlackRock is, you know, if I was a betting person, I'd bet there's going to be another few announcements coming out soon from BlackRock. I would say just one more comment. I mean, I don't think there's really, I would say there isn't uncertainty about whether these things will be approved and will become a part of, the kind of traded securities ecosystem in traditional financial markets. I don't think there's any uncertainty about that. The uncertainty is
how long is that going to take?
When? Yeah, exactly.
When? And there's a lot of uncertainty about that. I mean, and to your point, when they start applying for these approvals for Ethereum, then there's a whole nother can of worms there that doesn't get opened up when the regulators start looking into Bitcoin. So it could be the beginning of a fairly long process.
I suspect it may be that way. Then again, it might we might have hit that tipping point as a space now, and it may just be somewhat fast tracked because, trying to fight against it happening is not working. So might as well try to find a way to regulate it, and from their perspective, try to control it a little bit. We'll have to see. I know the regulators have had issues with proof of stake, even more so than proof of work. I'm not sure how that matters for an ETF application, but it might. We'll have to see. I don't know. And BlackRock obviously has been partnering with Coinbase and other brands in the space fairly aggressively. Big names, big partnerships, infrastructure, licensing, and a bunch of things, which is really cool. So personally, I'm a big fan of this. I think this is just a great additional step in the right direction. It's a feel-good story. I think it's part of maybe why the markets are not so timid at the moment. We're kind of seeing, again, I talk about this a lot, not financial advice. Also, don't follow any trades that I ever do because I'm usually wrong. But I mean, I suspect it's that waterfall effect again. Bitcoin and ETH had a pretty nice bump over the last couple of weeks. And, there's some people that are probably shorter term traders that had, or leverage traders that made some good money and now want to rotate it into some other things. And that's usually what happens. You see it kind of waterfall down from the majors down to kind of your blue chips and then down to your the rest of the tokens in the space generally. So that could be part of what's happening too. I really don't know, to be honest, but it's about bloody time. It feels good to see some green for more than 24 hours. So I'm definitely happy about it. All right.
I mean, every time that there's been a little pop in any of these cryptos in the last, year and a half, what tends to happen is then there will be like within 24 hours, there's just some other negative macro news that just brings it back. It just can't hold on to anything.
No. So now we're seeing maybe a little bit more momentum and stickiness, which I think I'm trying not to get too excited because it's been a long 2 years, the longest crypto winter yet.
Yeah.
So I don't know. I'm cautiously optimistic.
Yeah.
All right. We're going to chat a little bit about PYUSD. So I've talked a lot very positively about the team at PayPal with respect to ventures and crypto blockchain. We've known them for years. A very, very smart, switched on group of people that are incredibly diligent and effective. So I'm surprised to hear this. This again kind of goes a little bit against some of the positive, exciting momentum that we're seeing from regulators. And what they've done is the SEC has launched a legal investigation into PayPal and its stablecoin PYUSD, which I've never had any of. I don't think it's a super common asset yet. But for whatever reason, there's a lot of implications riding on this for the stablecoin markets. This could be another one of those short-term scenarios where regulation by enforcement is the approach, and they might be trying to regulate indirectly stablecoins using PayPal as the martyr, which really sucks because again they go after these big companies that have deep pockets, and the fines are exorbitant and the legal fees are incredibly high. It's very detrimental to the growth of the space, I think. But it's again, a lot of people are kind of waiting to see, okay, how are we going to address this? That's one of the big question marks still is stablecoin regulation in many jurisdictions. So what are your thoughts on this? Have you ever used PYUSD? I don't even know how to get it.
Yeah, I'm not. I mean, so a couple thoughts. One, I think there's a lot of scope for companies like PayPal to just use the payments infrastructure that we use in Web3 to facilitate a lot of what they're kind of already doing for their customers. And we've seen other recent examples of these kind of very narrowly focused tech initiatives. There was an article I think you sent over in one of our Telegram chats over the weekend about HSBC doing something with tokenized gold, where they had essentially built out their own payments infrastructure that just basically their own blockchain for the payments infrastructure. And so I think for PayPal to use something like Ethereum for settlement is very smart. And I don't think we should be discouraged. I think regulators are not on the right track if they're trying to discourage it. That being said, I think there's kind of a lot of moving parts here. So I'm not sure why PayPal decided to implement this with their own custom stablecoin. I mean, could they have also just done this with USDC, for example, and then let Circle deal with the regulators?
I really don't understand this. I mean, I think PayPal, of all groups, being one of the largest in payments, I'm surprised. I've also seen them be very, not cautious, but very objective in what they invest in, how they participate, because they're trying to protect their brand reputation and they know that they would be a big target. I mean, we considered launching a stablecoin probably 2 years ago, and even then decided against it because of significant regulatory uncertainty and focus on that in particular as its impact to money supply and monetary policy and all this other crap. So anyways, all that to say, I'm very surprised that PayPal went ahead with something like this, because to me, it seems like they must have had some assumption somewhere that led them to believe it was more likely than not to be acceptable. I don't know. I really don't know what to think about this one, but again,
and I mean, what's interesting is they also because apparently they aren't the issuer. They contracted Paxos, who has already been sued by the SEC for a different stablecoin.
Yeah. The whole scenario, just being sued by the SEC doesn't necessarily mean that you were in the wrong, even if you settled, as we've seen. But yeah,
it just means that some lawyer at the SEC sees a career opportunity.
Well, in particular here, this could be a make or break type lawsuit for someone, a prosecutor or investigator somewhere. I mean, if you get PayPal on the hook for a few $100 million or $1 billion like that, your job security is probably pretty good for a while. Especially with Gensler wanting to run the SEC like a for-profit business, which is kind of interesting, setting revenue goals and all this other crap. But I digress. All right. Before we pause for the day, we will talk a little bit about another feel-good story, at least one that is a little close to my heart, in the sense that, we know the guys that ended up winning the auction for Celsius and turning it into Fahrenheit very well. They're good friends and partners, and we've worked with them a lot. So this is a feel-good story. I think, I've been exposed to a lot of the process so far just through these relationships, what they've had to go through, what the obstacles were, challenges, costs. It's surely a space I don't want to play. Bankruptcy auctions and all of this kind of crap. I don't think I ever want to be a part of that after seeing what they've gone through. But as of, I think today, or it might have been at the end of last week, they have been granted approval for its restructuring plan, which obviously was critical to the acquisition. The restructuring plan is really exciting. And again, there's a whole ton of feel good around this because they have two goals here. Obviously, everybody and investors, their goal is to make money. But their primary motivation actually is to first make all the people depositors of Celsius whole by taking advantage of some of the other aspects of the business other than simply just the lending business. Take advantage of their mining, take advantage of some of their other assets, the VC assets that they have, and all of these other things, and a bunch of cash, and invest all of that stuff in early stage deals via Arrington's pipeline and others. It's a really cool story. I think, it's a different approach to watching what's happening with FTX. FTX is very standard bankruptcy crap, for lack of a better phrase. But in this particular case, it's really neat. They're taking a completely different approach. And this is just a feel good story for me. I know Arrington and crew really well also, Patrick. What are your thoughts on this? Do you think that they would do this again if they knew what they now know?
Yeah, I don't. Yeah, I don't know. I mean, you know them. You know them better than I do. But yeah, they are. It's we both are here in Miami, and of course they are here, and so they are an important kind of figure in the local community. I think what they've done here is very creative.
Right.
I can't say whether they would do it again, knowing everything they know now.
Yeah, I don't know. Like, it sounds like it was a very intensive process that no one expected to be like that. Obviously, it being the first time for many of them in these bankruptcy. I'm sure that I know they had really, really good advisors and attorneys and all that stuff. But just the sheer cost of these bankruptcies is also alarming. Like, I think they were spending $2 million a day on legal. A day. That's obnoxious. Like, how could you and they said it was crazy. Like, you would do a conference call with the group of people dealing with the bankruptcy auction, and there'd be like 40 lawyers on the call, all billing just to sit there. And like, so it's no wonder, like, this just turns into a huge grift in so many ways, these bankruptcies for the legal community. Of course they love it. All these lawyers get to charge a couple grand an hour and, you know, hang out and push paper around and file all these crazy motions and just keep getting paid. Anyways, but I do like this. It's a feel-good story. I think good for them. Hopefully the users, many of which we know well, yeah, not just us, but everybody. Like, a lot of the people impacted by this Celsius issue are a lot of major businesses in crypto. And it's a big hit. So hopefully everybody can be made whole. And this will be one of those really exciting things we talk about from a case study perspective down the road. So anyways, all right. Any final thoughts today, Patrick? Do you want a quick plug for Aero Markets? You guys got anything cool coming out?
Yeah, we have a bunch of stuff in the pipeline, so everyone should check out Twitter at Aero Markets or our website, aero.markets. Also, check me out on Twitter, 0xprotean. And for Aero Markets, there are actually a bunch of things in the very near-term pipeline, so I encourage everyone to follow. Check
it out. Follow your Twitter, follow Telegram, and you can learn all the exciting stuff. All right, quick reminder, live show Monday to Friday, 12:30 p.m. Eastern. Like, share, subscribe, help us get the word out. And with that, today I say to you, my friend, go FUD yourself. Later.